Today, we're really getting into the weeds on the future of financial technology. Our aim is to give you, our listener, a solid, clear understanding of the top 5 fintech trends that look set to be huge in 2025. Think of this as, well, your essential guide to where finance tech is actually going. Not just the headlines, but what's driving it. And we're basing this on insights from Sarah Benson. She's a software engineer deep in blockchain and Web3 for, what, over 5 years now?
That's right. She has some serious hands-on experience in this space.
Okay, so let's jump in. Trend number 1,
Alright.
decentralized finance, DeFi. We see it picking up steam, moving beyond just the crypto enthusiast.
Yeah, absolutely. And what's really interesting is it's not just DeFi growing on its own. The whole digital asset space looks ready to, well, explode this year.
Explode. Why now specifically?
A lot of it seems tied to the regulatory environment, particularly in the U.S. We're seeing some of the, let's call it red tape, being potentially cleared. And that perception alone is pulling in a huge wave of new investors, institutional money, not just individuals. They see a clearer path forward.
Gotcha. So it's maturing, becoming more formalized.
Hey there! Want to stay updated on funding info every single day? Subscribe to this YouTube channel. We've got tips, tricks, and insights that you won't want to miss. Get the knowledge you need to secure your funding, join our community, and empower your financial journey. Hit that subscribe button now.
And Sarah highlights 2 specific areas within DeFi we should really watch. Tokenized real-world assets, RWAs, and CBDCs.
Exactly. Let's start with RWAs. Tokenized real-world assets. It's basically what it sounds like. Taking a traditional asset, like, say, piece of real estate or even stocks,
Okay.
and creating a digital token on a blockchain that represents ownership of that asset.
So you can trade like a fraction of a building on a crypto exchange.
Pretty much, yeah. Or stocks. It allows traditional assets to be traded on-chain. The big advantages, it makes them way more liquid, easier to access for more people, and simpler to manage, through smart contracts. We're seeing traditional finance getting involved much more heavily now because of this potential.
That ability to turn something illiquid into something instantly tradable digitally, that's huge. Okay, let's switch to the other side of that coin.
Hey there! Want to stay updated on funding info every single day? Subscribe to this YouTube channel. We've got tips, tricks, and insights that you won't want to miss. Get the knowledge you need to secure your funding, join our community, and empower your financial journey. Hit that subscribe button now.
Other side of that coin, CBDCs.
Right. Central bank digital currencies. These are digital versions of a country's fiat currency issued and backed by the central bank itself.
We hear a lot about pilots.
Yeah, major economies are definitely exploring them, running pilot programs. The idea really is twofold. One, it's about modernizing payment systems, making them faster, more efficient.
And the second.
Financial inclusion, that's a really big piece. Think about countries with large populations who don't have bank accounts. CBDCs could give them direct access to digital payments.
Skipping the traditional banking layer entirely.
Potentially, yes. So central banks are looking at this either to work alongside private digital currencies or maybe to compete with them.
It makes total sense. As DeFi gets bigger and draws in traditional players, the regulators are bound to pay more attention.
Which, I guess, leads us right into the next big trend Sarah flagged.
Hey there! Want to stay updated on funding info every single day? Subscribe to this YouTube channel. We've got tips, tricks, and insights that you won't want to miss. Get the knowledge you need to secure your funding, join our community, and empower your financial journey. Hit that subscribe button now.
Yeah, this is where it gets really interesting. Trend number 2, regulatory technology, RegTech. You hear this term a lot now. Companies are, well, scrambling seems like the right word, to keep up with the rules.
Definitely scrambling, especially around crypto, but also data privacy. And AI just adds another layer of complexity to that privacy piece.
So what's the core challenge here? Is it just more rules?
It's not just more rules, it's the complexity and the global nature of it. Businesses operate across borders now, right? So they're constantly dealing with different regulations in different jurisdictions. You have to manage US rules, EU rules, Asian market rules. It's become a baseline requirement, not an optional extra.
That TikTok situation is a pretty stark example, even though it's not strictly fintech. All those questions about data, privacy, where data is stored, it blew up into national security concerns in multiple countries, huge business impact. Now imagine that, but with sensitive financial data. The stakes are incredibly high for fintechs.
Hey there! Want to stay updated on funding info every single day? Subscribe to this YouTube channel. We've got tips, tricks, and insights that you won't want to miss. Get the knowledge you need to secure your funding, join our community, and empower your financial journey. Hit that subscribe button now.
Existential, like you said. A compliance failure can mean massive fines, losing licenses, basically everything.
So how are they coping?
Technology, mainly. That's where RegTech comes in. Businesses are leaning heavily on AI and machine learning tools. These tools can monitor transactions in real time, flag suspicious activity, check against complex rule sets automatically, things humans just can't do at that scale or speed.
So the investment in this tech is worth it to avoid the fines down the line.
Absolutely. It's becoming essential. We expect AI-powered RegTech to basically take over large parts of compliance in the fintech world. It's almost inevitable.
Okay, moving on to trend number 3. This one feels closer to home for a lot of us. Embedded finance.
Yes.
It's essentially sticking financial services right into platforms that aren't banks or financial companies. Think about how that could simplify your day-to-day stuff.
Hey there, want to stay updated on funding info every single day? Subscribe to this YouTube channel. We've got tips, tricks, and insights that you won't want to miss. Get the knowledge you need to secure your funding, join our community, and empower your financial journey. Hit that subscribe button now.
Well, we're already seeing it quite a bit, aren't we? Like those buy now, pay later buttons that pop up when you're shopping online.
Right, directly at checkout.
Or, splitting the cost of a rideshare instantly within the app. That's embedded finance, too. It smooths out the whole payment process, sometimes making it almost invisible.
Reduces the friction, as they say.
Exactly. Less friction.
Sarah, our source, mentioned buying something small, an eyeshadow, on TikTok Shop. She said it was frighteningly easy. Like one click and done. It almost felt like it wasn't real money.
And that's the point, isn't it? That level of ease is what consumers are starting to just expect, especially in e-commerce.
It's becoming the baseline.
Yeah. And it's not just tech platforms. We're going to see more traditional retailers, travel companies, you name it, embedding these financial features.
Why? Just for customer convenience.
Convenience is part of it, sure. But it also opens up brand new revenue streams for them. They can offer financial products without needing to be a bank.
Interesting. Okay. Trend 4 takes us back to AI.
Hey there, want to stay updated on funding info every single day? Subscribe to this YouTube channel. We've got tips, tricks, and insights that you won't want to miss. Get the knowledge you need to secure your funding, join our community, and empower your financial journey. Hit that subscribe button now.
But from a different angle. AI-driven personalization in fintech. We all kind of know how platforms tailor feeds or recommendations now. Your streaming service knows what you watch, social media knows what you click.
Right, that basic concept of algorithms learning user behavior.
So how does that translate into the world of finance, which feels, a bit more serious than choosing a movie?
It translates in some really profound ways, particularly in areas like trading. Think about large language models, LLMs.
Okay, like the tech behind ChatGPT and similar tools?
Exactly. Their ability to understand and process natural language, but also to analyze huge amounts of complex, unstructured data, news, reports, social media chatter, regulatory filings. It's a game changer.
So a trader could just ask a question.
Pretty much. Ask a complex question in plain English. Like,
Right.
What's the market sentiment around semiconductor stocks based on recent earnings calls and news?
Yeah.
And the AI does all the heavy lifting, the queries, calculations, summarizing, and just gives back a clear text summary or maybe a chart.
Wow, okay. That saves a ton of manual analysis time.
A massive amount. But it goes beyond trading, too.
Right, you mentioned lenders, insurers.
Yeah, think about real-time adjustments. Lenders could potentially adjust interest rates based on real-time risk data. Insurers could personalize premiums much more dynamically. Banks can assess risk, well, on the fly.
Real-time risk assessment and strategy adjustment. That sounds powerful.
Hugely powerful. Fintechs really need to be embedding these AI capabilities just to stay competitive in 2025. If they're not, they'll likely fall behind very quickly.
Okay, that brings us to our 5th and final trend. It's about sustainability. Green tech in fintech. We used to hear a lot about the energy footprint of blockchains, like Bitcoin.
We did, and that's still a conversation, but it's broadened out significantly.
How so?
Now, the focus also includes the energy and, interestingly, the water consumption of running these massive AI models we just talked about. Training and running complex AI takes a lot of resources.
Okay. So the environmental impact of the tech itself is under scrutiny?
Definitely. And in response, you're seeing a couple of things happening in fintech.
Like sustainable investing.
Exactly. A big rise in platforms and apps focused on ESG metrics, environmental, social, and governance. The whole point is to let users invest in ways that align with their values. And this is proving really important, especially for, say, Gen Z consumers.
They're factoring ethics into their financial decisions more.
Hey there! Want to stay updated on funding info every single day? Subscribe to this YouTube channel. We've got tips, tricks, and insights that you won't want to miss. Get the knowledge you need to secure your funding, join our community, and empower your financial journey. Hit that subscribe button now.
Very much so. And then there's also eco-friendly banking. Digital banks are finding clever ways to reward customers for making green choices, maybe tracking carbon footprints of purchases or offering perks for sustainable spending.
So for fintech companies, this isn't just about being green, it's also strategy.
It's absolutely strategy. Implementing green tech within your systems, talking about sustainability, it's crucial for marketing, especially to younger demographics. But fundamentally, we just need to build tech sustainably if we want the planet to support future development. It's becoming critical.
Okay, so we've covered a lot of ground: DeFi, RegTech, embedded finance, AI personalization, and green tech. 5 big shifts. But how do these fit together? Are they separate streams or do they connect?
Oh, they're definitely connected. If you step back and look at the bigger picture, you see they form this interconnected ecosystem. They feed into each other.
Give me an example.
Well, like we touched on, the growth of DeFi makes sophisticated reg tech almost essential, right? And those reg tech solutions, they're increasingly powered by AI and machine learning.
Okay, I see.
Or think about embedded finance. It could make choosing sustainable options easier, maybe by integrating carbon footprint info right into a payment app when you buy something.
So understanding one trend helps you understand the others better.
Exactly. It gives you that holistic view, a real sense of where the whole industry is moving, not just isolated pieces.
So hopefully this deep dive has given you that comprehensive picture of the key fintech trends for 2025. It's moving fast, and there's obviously more detail we could go into.
Which I think brings up a really interesting question for you, the listener, to think about.
Yeah, let's leave you with this. Considering how quickly these 5 trends, DeFi, RegTech, embedded finance, AI, and sustainability are changing things, what established financial service, or maybe even a traditional institution, do you think will be most disrupted, maybe even become obsolete in the next, say, 5 years? And why? Something to mull over. Thanks for joining us for this deep dive. Definitely keep exploring these areas.